Hello, beautiful people. So, welcome back to this stock section of our training. So, first and foremost, I need every one of you to help this video to get at least 50 likes. If you haven't subscribed to the YouTube channel, do well to do so. And then again, you hit the notification bell. You can make your comment. You can also share this video because it can be a help to someone who need a guidance on how to manage their money in order to make more money. So for you to be able to start investing profitability or profitably, you need to first have knowledge about stock fundamentals. Every company have their fundamentals, and those fundamentals are what help individuals to decide if the company or the stock is a buy or a hold or a sell. Do you get it? So there are factors and there are indicators that I need to share with you so that you'll be able to understand. At the moment when I'm recording this video, the market has not opened. Of course, market will open on Monday, and when it opens this week, it's going to expose a lot of volatility in the financial market. Many stocks will go gaga, many will also go deep. However, when the market is in deep, it creates an opportunity to accumulate more, especially when you are buying valuable and well-structured companies. So you need to understand how well-structured companies are being determined. So some of the indicators I've always used for my mentors, my students, and my followers is these 5 factors or these 5 indicators of a company. One is the business quality. The business quality. What is the quality of that business? How structured is that company established? And I give you an instance. For many of you who have been following, let's say, Microsoft, or let's say Google, for obvious reasons, down early 20s, we have been searching for information through Google. Many of us, especially those who are in the school, any project you want to do, you have any question you want to attend to, you go to Google, you type in, you want Google to give you an answer, and after which you get some result. You do a lot of projects using Google to guide you through your project. And since then to this moment, over 2 decades, Google have remained consistent. Business quality. The same thing goes to Amazon. The same goes to Facebook. Early 2006, when Facebook came on board, many were seeing it as just a video or a picture viewing a platform. Before you know it, 2009, they introduced the chat. People can now see chat, but you cannot comment. They keep on improving until you cannot comment on chat or messengers. All of a sudden, Yahoo Messenger phased out, and Facebook could, structure its establishment, its company to be able to accommodate social engagement in the world today. And so, when you are trying to check the fundamentals of a company, first find out about the business quality. How quality is that business? Because if you go to the market, you want to buy any fashionable wares. If they tell you about Polo Ralph, or you want to buy maybe Calvin Klein, any one of them, you will always check the quality of that product in order for you to pay either a premium or a semi-premium for that product. So people pay for quality, not for quantity. So the company that you are bound to buy or you are bound to invest in, you must, as a matter of urgency, importance, and seriousness, you must check the quality of that company. Today, a lot of you are now hearing about Nvidia, but 2 decades ago, nobody heard about Nvidia. Many of you don't know about Nvidia. It's only those of us who are in the tech industry, we used to hear more of AMD because we buy computers. When they tell you about computers, they tell you about Celeron, they tell you about a lot of applications, a lot of applications that are used for computers. But once they mention AMD, people mistake it for AMD that the laptop is always very hot. So those are the things. And then it does not only end there, but today look at what Nvidia is doing. Nvidia took over 15-20 years to build on AI. When the world was silent about artificial intelligence, this company was busy building on artificial intelligence. And today, they control 95, if not 97% of the AI industry. Every other company like AMD who is trying to compete are just finding a way to have a fair share in the market. So the quality of the company. The same thing goes to Apple. Apple with quality. Then after you have checked that, you must check the financial strength. You check the cash flow, the free cash flow, the CapEx, that is the capital expenditure, the revenue, if it's a company that is profitable or not. That comes to profitability and efficiency, because not all companies at the moment are profitable. And I give you an instance. For those of you who have been hearing about OpenAI, yes, OpenAI is a company that is highly valuable. Currently, the valuation is over $500 billion, and is trying to hit $1 trillion valuation before it comes to the IPO. That company, even though the valuation is highly exalted, or exaggerated, as the case may be, but it's worth it, yet OpenAI is not yet profitable. So investors, both angel investors, private investors, are pumping money on OpenAI now that is not profitable. But you, who is still on the secondary market, you may be very careful. You may be very difficult to be convinced on how to invest on a company that is not yet profitable. But like I said, the first stage of any company fundamental is the business quality. The business quality. If a company's quality is well organized, you don't mind paying premium. But because we use Warren Buffett method of investing, we don't want to buy any company at a premium. We prefer buying good company at a lower price, meaning you watch when the company is trading below the intrinsic value, and then you buy them. Haven't checked that the company valuation. There are company valuation that you must always check. Some people will always overvalue them even when they are not equal to the valuation. And I give you instance. This is AMD. If I come to the valuation of AMD, it will show if it's profitable or it's trading below, and you can see it is 41.1% undervalued. This is how you check valuation. And of course, mathematically, you can work it out. The discounted cash flow model that is used. I always use these platforms after I've done my paperwork, and I use all this to confirm my valuation. Currently, it's trading $207.32, and then the fair value, which is the intrinsic value, is $352.15. Meaning that if you buy this stock at this price, you have over 40% to go. So these are profitable company. I've been able to buy this company. I think I bought 20 units of it. I want to make sure I make it up to 100 units before it touches its intrinsic value. So these are one of the things that you must always check when you are buying a company. And so I can scroll down and check the health of this particular company. I will always check the key information for that, the cash the equity, the total liability, total assets. When you hear liabilities, most of these companies they are built on on debt. So they borrow to be able to build up their company, and it's not a crime to borrow. You only watch to see if the company's structure is well compensated in order for you to decide. So having checked all this, I will always check, yes, the reducing debt, AMD debt to equity ratio has increased from 4.2% to 5.1% over the past year. So you can see they actually borrowed more. They borrowed more because AMD is building currently on data center because it's trying to compete with Nvidia, and of course it's going to really compete with Nvidia. A lot of people, a lot of companies, a lot of Nvidia's customers like Apple, Google, you have Facebook, you have Amazon, Microsoft. All these are big companies that buy Nvidia's chip. And so now many of them are trying to look for an alternative because Nvidia's products are very expensive. So if they could have any alternative where they can buy this product at another cheaper rate, they will always take it. And AMD stand up at that position to be considered. That is why AMD have actually borrowed more money in order to build on these data centers, at least within the next 5 years. That is why you can see this. Otherwise, AMD has more cash than its total debt. The cash flow, that is the free cash flow. Then the debt coverage, the debt is well covered by operating cash flow. You can see that currently AMD has over 239.3% free cash flow, that is operating cash flow that it can use to run its business. And it also earns more interest than it pays. You can see that. So all these are some of the things that you must look at. And then as an investor or an investment portfolio manager, you must look at the balance sheet of any company whenever you want to buy from them. You must look at all these. All these are important for you to consider moving forward. So having checked that, I will always go back to the management and ownership. It helps me a lot when it comes to management. As an investor, one of the things that you must consider before you buy a company is the management. Management has to do with both the manager, the directors, and different part of that company, such that if a company has employed a manager or a director and the person has stayed in that company for the past 5 years, it shows stability. What did I say? I said it shows stability, because for those who watch football, I want to use football as an example. There was a time Chelsea Football Club will employ a manager this year. Before 8 months or before 1 year, they fire the manager as a result of consistent loss of matches. That instability affected Chelsea so much because when your management are not stable, they come in, they go, they come in, they go. It does not show that stability, because nobody understands the company. For a manager to be able to thrive better in a company, at least you need up to 2 years to understand the company and then be able to bring in your wealth of knowledge into it to be able to build it. Not the one you enter today. Before 6 months, you have started preparing your firing, your exit letter. You won't be able to focus. The company will not be able to grow well. Compared to, you can see what is happening in Arsenal. For those who follow football, Arsenal Football Club, Arteta is actually understanding the company, is moving with the club, and is winning games. You may be surprised that this club will carry the league because it's doing well. That is what we mean by management. Yes, the management of any company that you're about to buy their stock should be a consistent management. At least the director, the managing director, should have been in that company at least 4 or 5 years, if not more, for you to be convinced of being with that company. Another thing that you also consider when it comes to fundamentals is the ownership. I love the act of insiders buyback. Insiders buyback, like the company itself buying back their shares. Facebook was always doing it 2023, 2024. Whenever the stock price drop a little bit, you see the company as a company buying back their own shares. It means that they believe in their company, they believe in their establishment. Not when the owners of a company cannot buy their own shares. Instead, they go back to also be scouting for other companies to buy because of value, because of profit that is lying beneath it. So you must check this, and when you are checking this, let me go ahead and ownership breakdown, public compensation, state or group, individual insiders. You can see that individual insiders, you see 0.446%. This shows that insiders are buying the shares. Insiders are buying the share. The general public, you see, the general public are already 31%, which is of course the rare. In fact, it's always the case. The public, that is secondary market, will always be the more people that are buying. But always find out that insiders are also buying. For instance, if I'm a banker and my bank is selling shares, why won't I buy from my bank shares? If my bank shares is a profitable one, a valuable one, why would I not buy? So, but when you see some persons, they work in a bank, but you ask them, do you have your bank shares? They say, no, I don't have shares in my bank. Oh, it means that they don't believe in their establishment, no trust inside. So for you who want to buy, run away from such establishment. Run away from such establishment. No matter how it is, one cannot be working in a bank or working in a company and the company is selling shares and you cannot buy, even if it's 2 or 3. If you believe that there is profitability, there is growth, there is future in your company, you will always want to buy your own company. That is what you need to understand. Then the dilution of shares. Dilution of shares has to do with the stakeholders, have not been meaningfully diluted in the past years. What this means is that when you say share dilutions, sometimes you just notice some level of deep down in the prices of a company. Companies can just come up with some structures that dilutes the price of their shares, and once it happens, it costs, in fact, it causes a lot of I would say a lot of setback in the progress of any share that you buy. So AMD have not done that in the past years, in the past 1 year, meaning that this company is well structured. And then moving forward, you also check the top shareholders. The top shareholders. For instance, if I have a share that I list in the stock market, whether in the US Stock Exchange or Nigerian Stock Exchange, and that shares, you notice that individuals like Femi Otedola from Nigeria is buying that shares. It means that this company, this shares, has a high level of value, because these are individuals that are well respected when it comes to investing. Or I list a stock in the US Stock Exchange, and you notice that someone like Nancy Pelosi, the former Speaker of the House of United States, bought the shares. In fact, it creates a level of credibility, and so you will always beat your chest to say you want to buy these shares. So looking forward on this AMD, you can see the first among them that has the highest shareholder, the Vanguard Group, the VOO. This is a very big investors group, having 9.7% ownership. Then you check the BlackRock. Many of you should go and read the BlackRock. BlackRock today is the largest asset managers in the world today. And so this company 9.0% ownership of AMD. You have many others. These are we call them institutional ownership. So those are some of the key factors that you must consider when you are buying any company. And again, don't forget, always read about the information of the company. Like I said, you can go through their most recent earnings report. On their most recent earnings report, you will see what they projected that will happen in the next coming year, what they have done, how they are going to do it, the kind of investment they are making, new product that they want to bring into the market, or new features, creating opportunities, and how they are going to do. That is why I always love to listen to the Wall Street call, that is the earning report call of any company. I always follow it. In fact, I set my alarm to make sure that I listen to the call of the analyst to any company when they list out. So guys, there are many that we're going to be covering on this stock fundamentals. This is just the first day. In the coming days, I'm going to also complete the class where many of you should understand why you invest in any company. And once you understand all these factors, when you buy any company, and probably after buying it, you notice that the stock price drop, you will not be disturbed, because you know what is backing you up. You know where you are going. When you know where you are going, you will always have that confidence that you must get to the destination. That is why it's important that you read all this. These platforms that I'm using, these applications I'm using, they are all paid applications where I subscribe over 600,000 to be able to get access to these applications, to use them to analyze this stock. That is why for any stock I list, it must have gone through these fundamental processes before I list them. So you can go ahead. Now is the right time for you to start accumulating stocks, because prices are down. Don't wait when they peak before you buy. Always analyze, always buy them more now that are deep. Even if you have bought before, there is no better time to buy a share in the market than the moment you have the money to buy. Because at the time that the stock price may drop, you may not have the money to be able to buy any stock at that time. So you buy it at the moment, at the time you have your money. So it depends on how you follow the market. On this note, I want to call it a day, and thank you all for listening and following up this class. Once again, you can share, you can add your friends to the group. If for those who are already in our portfolio management, of course, we'll always help to manage your account. So the best thing you can do, fund your account, fund your portfolio, and let me know that you are funded. We'll always go there and judiciously, distribute your funds into the right stocks to buy. Thank you, guys.